Thank you for joining us for Wealth Building Secrets for Real Estate Investors. Year-End Tax Planning. Ebere Okoye, CPA. The Wealth Building CPA. Ebere Okoye is a CPA, an active real estate investor and founder of Wealth Building CPA. She owns real estate investments in 5 states across the Eastern Coast. Her company has helped over 5,000 people like you prepare their taxes online and offline. Her greatest joy comes from helping clients, friends, and associates become free of financial stress. 1-888-502-3767. www.wealthbuildingcpa.com. info@wealthbuildingcpa.com. The WBCPA Advantage. Here's some information on the Ultimate Wealth Building Plan. The Ultimate Wealth Building Plan. Stage 1 Focus. Financial Needs Analysis Questionnaire. Stage 2 Focus. Tax Planning and Preparation. Stage 3 Focus. Entity Structuring and Formation. Stage 4 Focus. Business Registration and Bookkeeping Setup. Stage 5 Focus. Business Analysis Meetings. Stage 6 Focus. Investment Property Purchasing. Stage 7 Focus. Retirement Planning. Stage 8 Focus. Year-End Tax Planning. For more information, please visit www.wealthbuildingcpa.com after this presentation. The Ultimate Wealth Building Plan. The Wealth Building Program is a 12-month training program that takes you step by step through the steps required to run a successful and efficient real estate business. Ebere and her team have developed this system after years of working with business owners and real estate investors on how to best use their professional skills, passion, and experience to pursue their entrepreneurial dreams. This program focuses on a specific element of the wealth building system: tax planning, tax preparation, entity structuring, business meetings, etc. At the end of the 12 months, you'll be in a position to operate a successful real estate business. During these 12 months, Ebere will work with you on all aspects of your finances that will reduce your chances of mistakes due to the chronic lack of communication and integration of services between your CPA, lawyer, tax, and investment advisor. Ebere also has a special component of the wealth building plan designed specifically for foreign and out-of-state investors. The Ultimate Wealth Building Plan. Stage 8 Focus. Year-End Tax Planning. Tax preparation for the April 15th return is not considered advanced tax planning. It is merely tax compliance as opposed to voluntary tax reduction planning. Though returns aren't due until April, they cover a tax year that ends December 31st. Some of the best tax reduction moves really need to be done by mid-November or early December. They often take some advanced planning. Getting ahead in September could make you a lot happier in April, giving you a bigger refund or a smaller check to write to Uncle Sam. This stage does exactly that. You either pay the IRS, pay a tax preparer, or pay a qualified CPA to come up with some tax reduction strategies. For more information, please visit www.wealthbuildingcpa.com after this presentation. Wealth Building CPA. Time to start year-end tax planning. It's that time of year. Year-end tax planning is very important, especially for real estate investors. A lot has happened this year in the real estate market and the general economy. It impacts the portfolio of many real estate investors in many ways. It also impacts tax issues that will be confronting us in the upcoming tax filing season. Wealth Building CPA. Time to start year-end tax planning. Now is prime time for investors to put tax planning strategies into place that can help reduce their liability for the new year. December 31st marks the cutoff date for delaying income, accelerating deductions, gifting appreciated assets for the current filing year. Anytime from September through November, taxpayers should be thinking about year-end tax planning. To be able to plan ahead, you have to know where you are. Wealth Building CPA. Capital gains. Investors can also minimize their capital gains tax bite by selling stocks and mutual funds that have lost in value before the end of the year. The Internal Revenue Service allows investors to offset capital gains with capital losses dollar for dollar. An excess capital loss can be used to offset other income, up to $3,000 per year. Leftover capital losses beyond that can be carried forward to offset gains in income in future years. Wealth Building CPA. Charitable donations. Investors can donate appreciated property instead of cash to a charity, which yields even more savings. Because an individual can deduct the property's fair market value on the date it gifts and avoid paying capital gains tax on the appreciation. Before making a donation, however, investors are urged to check and ensure they are eligible to claim charitable donations as a deduction. Wealth Building CPA. Year-end tax tips to save you money. Plain vanilla year-end tax planning strategies suggest that all taxpayers should generally defer income and accelerate expenses in order to reduce current year taxable income and tax liabilities. But the AMT, alternative minimum tax, is becoming an increasingly big problem, turning most tax planning logic upside down. Wealth building CPA, alternative minimum tax. AMT is catching more and more individuals. Those who happen to have significant deductions, those living in a state with a relatively high personal income tax rate and high real estate taxes, are vulnerable. The AMT makes year-end planning difficult and potentially dangerous if done in a vacuum. Wealth building CPA, individual income tax considerations, bonuses and salaries. If your employer will defer the payment into January of next year, bonus and salary amounts will not be taxed on your return until next year. Stock and bond sales. You may want to consider not selling stock with a gain until January to defer recognition. However, only $3,000 of net losses from security transactions can be deducted currently. Wealth building CPA, individual income tax considerations, deductible expenses. Charge deductible expenditures on credit cards to get a current deduction even if payment of the charge will not be made until next year. Charitable donations. Make charitable donations with appreciated stock owned more than 1 year. The fair market value is used to measure the donation, and there is no tax on the difference between your cost and the fair market value. Wealth building CPA, tax considerations for the self-employed. For cash basis method businesses, send out invoices late in December so that collections will not be made until January. Establish a retirement plan before year-end. The deduction is allowed on the current year return, even if funded just before you file the return next year. While many plans can be funded next year for a deduction, only an SEP plan can be established next year. Other plans need to be established this year. Wealth building CPA, last-minute tax saving strategies, prepaid deductible expenditures. If you itemize deductions, accelerating some deductible expenditures into this year to produce higher write-offs makes sense if you expect to be in the same or lower tax bracket next year. Early mortgage payment. Accelerating the house payment that's due in January will give you 13 months worth of deductible interest, also applicable to vacation homes. Wealth building CPA, last-minute tax saving strategies. State and local taxes. Prepaying state and local income and property taxes that are due early next year can reduce your federal income tax bill, because your total itemized deductions will be that much higher. Charitable donations. Prepaying charitable donations that you would otherwise make next year can reduce your federal income tax bill, because your total itemized deductions will be that much higher. Wealth building CPA, last-minute tax saving strategies. Medical expenses and miscellaneous deduction items. Consider prepaying expenses that are subject to deduction limits based on your AGI. The two prime candidates are medical expenses and miscellaneous itemized deductions. Medical costs are deductible only to the extent they exceed 10% of AGI for most people. However, if you or your spouse will be 65 or older as of year-end, the deduction threshold is a more manageable 7.5% of AGI. Wealth building CPA, top 10 year-end tax planning checklist. 1. If you own a business, do you have an EIN number, operating agreement, and a separate bank account? 2. Have you recorded all the income and expenses related to the business on the business bank account? This is a huge audit item. 3. If you own investment property that was foreclosed or sold as a short sale, have you considered the impact of the cancellation of debt income on your individual income taxes? Have you calculated the loss of sale of investment property? 4. If you generated any kind of active real estate income, have you considered restructuring your business to minimize the impact of self-employment taxes? 5. If you have significant real estate education expenses, have you registered a business in order to minimize your audit exposure on deducting these expenses? 6. If you have significant business expenses and already have a registered business, have you considered converting to a partnership to avoid an audit flag? 7. For homes that have been repossessed, do you know the rules on recourse versus non-recourse debt? 8. Do you understand what your tax filing requirements are for the states where your business is registered, such as annual filing, personal property tax returns, etc.? 9. If you own investment property, have you considered doing a cost segregation study in order to increase your depreciation expense? 10. If you bought or sold property this year, have you considered the impact of capital gains, adding rehab expenses to the basis of the property, and whether the holding costs, mortgage interest, taxes, and insurance are deductible next year? Contact us for help. There are a lot of changes to your taxes to absorb, Let us work with you to figure out the best solution for your tax situation. Call us for a free consultation at 1-888-502-3767. You can reach Ebere Okoye on 1-888-502-3767. www.wealthbuildingcpa.com. info@wealthbuildingcpa.com.